Hey folks, CA Rachana Ranade here and I welcome you all to a shoot and release video after a long time. Just a disclaimer, one quick disclaimer is that because this is a one take, so what does this, what does that mean? I start with hey folks and I continue till then. Take care, Jai Hind, bye bye. So just in case if I fumble upon something, please don't forget to check out the pinned comment. So if I fumble, the correction will be there in the pinned comment and in the description box. Okay, chalo. So with that, let's get started. Today's whole discussion is about Trump's tariffs and whether it's a mystery or not, whether it's got something to do with a trade war or some things are way beyond that. I'll be honest with you, me and my team, we have tried to really research a lot on this topic. I'm not an economist pro per se, but I love understanding more about economics. I love to understand the impact on geopolitics and on nations' economies. So this is an honest attempt from my side to understand what lies beyond this game of Trump tariffs. So what we are going to do, I've just prepared a presentation. I'm going to quickly show that to you, and with the help of this, you will be able to understand what's going on. Have a look at this. 36215-7617-618-891. And what is this? This is the figure of US national debt. This is just $36.22 trillion. Okay. Now, when I saw this for the very first time, I was like, oh my God, this is huge. Totally agreed. This is absolutely huge number. But typically, we don't understand whether it's more or less only by looking at this. 36.22. Is this big or not? For that, we have to compare debt with the GDP. So what do we check typically is the debt to GDP ratio. And how much is it for the US? It is currently standing at 124. What do we mean by 124%? If their debt is 100, then if their GDP is 100, their debt is at 124. Is that insane? Is that crazy? Yes. I want you all to do this as a homework. Check how much is India's debt to GDP ratio and comment the answer in the comment box. Okay. Now, when I was looking at this, when I was trying to understand this, I said, okay, it was going down, it came up, but how has it been historically? And for that, I'm going to take you to, again, proper authentic data. Let's just open this site and understand about how does the data look like. We'll just select max and then we say apply. It's loading. It's a very interesting stat that you're going to see. One more time. Let's go to the 1 year data and say, okay, apply. What's wrong? Acha, yahan pe aa gaya. Okay, 1 minute. Max. Now you can see here. It got applied in a different tab. No worries. Chalo, let's have a look at this. Now, what can you see here? Debt to GDP at one point in time was what? 38%? Way back in 1970s. It rose in 1995 to a shade more than 60%, maybe a shade below 65%. Then again came down. Which is the biggest and the sharpest incline here? This is post 2008. So 2008 was a time when US understood that, okay, if we want to get out of this crisis, we have to print dollars and just give it to the people. So it doesn't happen like printing dollars per se. US Treasury comes into play. Debt of the country increases when they print more and more dollars and give it to the people. So here you can see a sharp incline, and this is where they hit 100 ka GDP, debt to GDP for the first time. You can see here, we have data since 1970. It had hit 100 ka debt to GDP post-COVID. Can you see a similar or a sharper increase? Yes. And when is this? This is back in 2020. So you can understand that it was at this point in time when it went way beyond 120% ka debt to GDP. But that is what they have been doing. US has been following this since 2008. In Marathi, I say, chapa nota, buzwa tota. What do we mean by that? Just print more and more notes, infuse it in the economy, and that's how you get the economy out of a crisis. That has been the formula done by US since last 2-3 major crises. But is there a big downside to this? And answer is absolutely yes. See, please understand, more and more debt is equal to more and more interest payments. Now, let's check how much has the interest payment been for USA. Again, this is the latest data. I have taken all these data points only from the official website, so you can totally rely on them. You can see your net interest income, net interest expense. And how much is that? $881 billion. This is actual data as at 2024, okay. $881 billion of net interest. But you can see here, again, is this big or not? For that, let me compare it with something. I have highlighted here defense. So typically US is a nation which is more inclined towards spending for defense. So what has he done is that because of the current scenario of rising debt, their interest payments have increased. as high as more than the defense budget, more than the defense spending, budget outlook here by the way this is. But then he has to control this figure. I hope you understand this. See, if he is not able to control all these expenses, what will happen? US fiscal deficit will keep on increasing. Okay, so just to give you a quick sum up of whatever we have done till now. Number one, I said that because we are trying to understand what's wrong with USA, we talked about the loan ka number. Okay, loan is high or not. For that, what did we calculate it? What did we compare it with? Debt to GDP. Then we checked historically how much debt to GDP has been. Then we said, oh, if the debt to GDP is at the highest, interest cost will be also high. $881 billion. Is it high or not? For that, we compared it with defense. It's bigger than the defense number. Always understand, higher the expense, higher could be the deficit if their income is not that high. How much has been the average fiscal deficit? Average fiscal deficit has been at 3.8. Okay, always understand, deficit is also expressed as a percentage of GDP. So 3.8% was the average fiscal deficit, and the actual fiscal deficit is at 6.6%. Is this high? Yes. What does he intend to do? Number one, bring it down to 6.2% and further to 5.5% in the next 2 years. And for that, what will he be required to do is control this interest cost and also control all these expenses to some extent wherever possible. For all other expenses, this is the revenue by the way, all these expenses I meant to say. For cutting down on these expenses, I am sure you might have heard and read about DOGE, which was headed by Trump, okay, Department of Government Efficiencies. He has tried his level best to cut down on these spendings, and now what is he targeting? This interest cost should be less. Now, how could the interest cost be less is again a very, very important point, a very interesting point coming up. But before that, a quick shout out for my Har Ghar Investor event. Oh my God, this response is super. You can see all the grey dots. This is booked. Only few seats are remaining, almost 600 bookings done. I request anyone who is in and around Bangalore, don't forget to book your seat. It's going to be fun. We are going to learn about recession as well. We are going to have a separate segment on recession. We'll try and understand historically what has happened. How has India gotten impacted? How has US gotten impacted? What sectors could we watch out for? There's going to be a separate Q&A session. Fun segments on mastering money management. So much to learn and so much to have fun for. Don't forget to book your seats as early as possible. This is filling super fast. Link is there in the description and in the pinned comment. Right. So with that, let's get back to where we were. Interest cost. They have to control that. Now, how can this be controlled? And for that, I checked what has been the average rate of interest for the US. This stands at 2.43% roughly. Average rate of interest this is. Now, what happens is that when they were to refinance this debt, while refinancing, they'll have to refinance it at the current rate of interest. What is the current rate of interest? It is at 4.18%. This is the US 10-year ka treasury that I've taken as a base. Okay, it could be a little bit more or less, but I've taken the base as US 10-year treasury. So you can imagine that if the interest rate goes up from 2.43% to 4.18%, quickly tell me, will this interest cost increase or decrease? This will increase. And this is what Trump does not want. He says the interest cost should go down. Okay, wait. Maza aane wala hai abhi. Okay. Now, how much is due for refinancing is important. Okay, out of the total debt that we discussed about, $36 trillion debt, out of that, 7 to 9 trillion debt is due for refinancing. Okay, now this is the only data set which I did not find, which I was not able to find from an authentic.gov types website or Bloomberg or Reuters. I found multiple websites, multiple places where the numbers were ranging from 7 to 9 trillion, and that is the reason why I said let's take this as a range. It could be from 20% to 25% of its total debt of 36.22 trillion. Now you can imagine 20% to 25% of its total debt getting refinanced, and if that gets refinanced at a higher rate of interest, will Trump's target of reducing the fiscal debt come into place or no? Very difficult. So, to ensure that fiscal deficit is under control, he wants to ensure two things. The rate at which this debt gets refinanced is low, number one. Number two, he also wants to ensure that the revenue of the government increases, and that can be done with the help of tariffs, right? So, what is his strategy? This debt refinancing should be done at a lower interest cost. That's what I said. Should be lower than 4.15%, and he wants to ensure that the deficit should also reduce, and that is the reason why he is saying, I'm reading out his tweet, oil prices are down, interest rates are down, and now he is targeting the Fed chairman. The slow moving Fed should cut rates. Food prices are down. There is no inflation. What are you saying? There's no inflation. Now, again, if we happen to visit something like trading economics, again, if you have enrolled for my course on economics for stock market, you already know this website. It's a very good website. I refer to quite a bit. So I'll just take you here, United States. Just click on this. Then I go to inflation rate. And now if you see here, inflation is absolutely there. In fact, it has been increasing continuously from September till January, shade lower at 2.8 right now. And what is Mr. Trump saying? There is no inflation is what he says. According to him, there is no inflation. Okay. So he's saying there is no inflation. So Fed has to bring down the interest rates. And he's now, the whole balanced part of the tweet is about how other countries have abused USA and how they have charged more and more tariffs. So I hope you have understood that till now I have not even used tariffs for more than one or two times. It has been more about their interest rates, which he is really concerned about. So what he feels is that everything is under control, oil prices are down, interest has to still go down further, food prices are down, there is no inflation. That is what he believes. Now let's understand what economists believe. Economists say that if you increase the tariffs, this is going to lead to inflation. And if inflation increases, obviously there will be a need to increase interest rates. Now if you ask me, what is my opinion? Do I agree with what Mr. Trump says, or do I agree with what economists think? Of course, I do agree with what economists think, because if inflation is high, there is definitely a need to increase interest rates rather than decreasing them, and then only inflation will come under control. But Mr. Trump thinks it the other way. So in short, right now there is a tussle between Powell and Trump. And even I was wondering that can Trump remove Powell or not? And for that, I just checked this on the internet again. And it is very clearly mentioned that, and all reliable sources, again, all, as I mentioned, all Bloomberg, Reuters, all these data points I've taken. Federal Reserve Chair Jerome Powell is not legally required to follow directives from President Donald Trump. Number one. Number two, again, really important, Powell has asserted that the president does not have the authority to fire him. Okay. So right now, all in all, to conclude, where are we? What is the key scenario here? The main scenario is that currently, Trump is wanting to impose tariffs, number one, to increase the income of USA. If income increases, fiscal deficit could come under control, which is his target. He wants to make America great again. For that, he is saying, I will ensure that more tariffs are induced, and because of which the manufacturing in USA will grow. If manufacturing grows, jobs will be created. If jobs are created, then obviously the spending power of the Americans will increase, their income levels will increase, and the economy will boom again. On the contrary, the bigger problem is about the debt. The debt issue is not caused right now. It has been increasing, as I showed you the graph, very interesting graph, right from 2008, how their debt has been crazily increasing, and this is where the true pain lies. They have to ensure that this debt comes under control. For that, the debt refinancing issue is what we discussed, and this is a great tussle between tariffs, interest rates, what could be next. So today I tried to bring in front of you an economic angle to all these tariffs. So what do you feel? Did you find some knowledge in today's video or not? Do let me know in the comment section. Today's video was way different than our normal stock market videos. Just let me know if you love such economy related type of videos or not. I'll definitely, I would love to do more and more videos of such kind as well. And again, a quick reminder, because this is a shoot and release video, if I fumbled on some words, don't forget to check the pinned comment and in the description box if there are corrections, right? I'll see you in the next one. Till then, take care. Jai Hind and bye-bye.